Hello students, we are solving few problems of income from business for practice purpose. Okay, so let's see this question. Following is the profit and loss account of Mr. Harish for the assessment year 2016-17. Two purchases, it is a P&L item, you are not supposed to do anything about it. Two salaries and wages, it's a P&L item. To rent, it is a P&L item. To advertisement, 3 lakh, it is a P&L item. By sale, it is a P&L item. By interest on FD, interest on FD will not come here. It has to be treated separately. It will be under income from other source. So you have to remove the effect of interest on FD from here. Okay. So because of interest on FD, your income, your net profit has increased in this P&L item. So you will remove this effect by subtracting. Okay. So by interest on FD, 10,500 you will subtract. By bad debts recovered, not allowed earlier, so it was disallowed earlier, that means you have already paid tax on this 20,000. Okay, so this time again you will not pay tax, so this 20,000 you will remove from your income. Okay, next, to traveling expenses, 2 lakh, okay, it is a P&L item. To bad debt, 52,000 is a P&L item. To general expense, 3 lakh, it is a P&L item. To provision for taxation is disallowed, you will remove the effect. Okay, so because of provision for taxation, your net profit has increased, sorry, it has decreased, net profit is decreased, so you will add provision for taxation. Because this is disallowed, expense disallowed, you will add. Okay, to addition to office building, it is a capital expenditure. Okay, you will remove this expense, so you have to add. To fines and penalties is disallowed, you will add. To sales tax paid, 2,50,000. Now sales tax paid, it is paid. Sales tax, now in the exam sales tax will not come, instead of sales tax GST will be asked. Okay, so to GST paid, it is allowed. Only if GST is paid, it is allowed. Okay, only if it is paid till the due date of filing the return, it is allowed. Okay, to income tax paid, it is application of income. Okay, so you have to remove the effect, so you have to add back. Okay, so by refund from income tax, this is just a refund, it is not an income. Okay, so you will remove this effect, so you will subtract it. By interest on income tax refund, this is income from other sources. Okay, so you have to subtract it. By rent received is income from house property, you will treat it separately. Okay, by winning from lottery, income from other sources, you are treating it separately. By profit on sale of shares, it is capital gains, you will treat it separately, so you will subtract. By dividend from Infosys Limited, this is income from other sources. Okay, you will treat it separately. So incomes what you are treating separately, you have to subtract from the net profit. Okay, now purchases include 30,000 paid in cash. So if there is a cash, if there is an expense paid in cash more than 20,000, it is fully disallowed. So 30,000 full amount will be disallowed. Okay, so expense disallowed, so you will add to the income. Advertisement expenses include cost of neon signboard, rupees 50,000. So 50,000 is capital expenditure, so you will add back. Sales tax of rupees 30,000 of previous year 15 paid during the year, it is paid during the year. Okay, so this 30,000 is allowed, so you will subtract 30,000. Actual bad debts amounted to 60,000. Okay, so actual bad debts is 60,000, and in your P&L account it is 52,000. So 52,000 already you have claimed. Okay, so 8,000 you have to claim. So bad debts you can subtract 8,000. General expenses included 50,000 drawn by the assessee. So 50,000 is drawings. Okay, so 50,000 expense you cannot show, so you have to add 50,000. So let's start solving. Okay, it's a very simple problem, and this kind of problem we have done in the class. Okay, so let's start. Computation of income from business. Okay, make 3 columns: particulars, amount. Now net profit as per P&L account. So net profit as per P&L account given is 34 lakhs. You will add all the expenses disallowed. Expenses disallowed which is there in the P&L account. Okay, and you will add expenses to be treated separately. Expenses to be treated separately, and it is shown in the P&L account. And you will add expenses. Yeah, that's it. Yeah, you will also add income which is not shown in the P&L account, but it is income from business. Okay, so add income not shown in P&L account not shown in P&L account, but it's under the head. I will not write this. Okay, so you will add the incomes which should be under income from business. Okay, and it is not there in the P&L account, that also you will add. Okay, you don't need to write because it's understood. Okay, so I leave few lines and I'll write the things which I'm supposed to subtract. So things which I'm supposed to subtract is less income to be treated separately, income to be treated separately, exempted incomes, and expenses allowed which is not there in the P&L account. So allowed business expenses. Okay, so here to purchases it is a P&L item, to salary P&L item, to rent P&L item, to advertisement P&L item, to traveling expenses P&L item, to bad debts P&L item, to general expenses P&L item, to provision for taxation. So to provision for taxation is disallowed. Okay, because of provision for taxation my net profit has decreased. Okay, so I have to remove that in effect, so I have to add. Okay, so provision for taxation, provision for taxation, provision for reserve for provision for bad debts, that you will add. Okay, bad debts it's allowed, provision for bad debts is disallowed. Okay, so provision for taxation 3 lakhs. Next, to adding office building. Okay, adding office building, capital expenditure. So I'll write addition to office building. It is a capital expenditure, so I'll add back. It is not a P&L item. Okay. Next, fine and penalties are disallowed. So fines and penalties. Fine and penalties 1 lakh. It's disallowed expenses. Okay. Sales tax paid. So sales tax is paid, so it is allowed. Okay. Only if sales tax is paid, then it is allowed. If it is due, not paid, not allowed. Okay. If it is due but paid before the filing of return, then also it is allowed. Okay. So in the exam, sales tax will not come. Instead, GST will come. Sales tax has become GST, but the effect is same. GST paid, allowed. Okay. So GST is paid and it is shown in the P&L account. Okay. So you are not supposed to do anything about it. Income tax paid is application of income. So income tax you have to add. Income tax paid, add. Okay. So we have seen all the debit side. Let's see all credit side. Buy sales, P&L item. By interest on FD. Interest on FD is interest on FD is income from other sources. Okay, because here you are supposed to find gross total income. If you want, we can like start, showing here income from other source. Computation of income from other source. Income from other source, 2 columns, particulars and amount. So yeah, interest on FD 10,500. Okay, it is income from other source. Okay, next, bad debts recovered not allowed earlier because you have already paid tax on this 20,000. It was disallowed. So you have already paid tax in this 20,000. You will not pay tax again. Correct. So remove it from your income. So less bad debts disallowed earlier. Bad debts recovered disallowed earlier. Bad debts recovered disallowed earlier. How much is the amount? 20,000. Okay. By refund of income tax, it's just refund, it is not an income. Refund of income tax will be 30,000. Did I remove this interest on FD 10,500 from here? Oops, I forgot that. I have to remove, no? Interest on FD 10,500. Okay, it is income from other source. It will not come here. Income from it will not come in income from business. So I removed interest on FD from income from business, and I've put it to income from other sources. And I have put it under the head income from other sources. Okay, by interest on income tax refund. So this also will be under income from other source. So interest on income tax refund, it is 3,000. This 3,000 is also under income from other source. So I'll just add it here in income from other source. Interest on income tax refund. $3,000. Okay. Next, rent received. Rent received, I would say it is income from house property. Okay. Yeah. Rent received, income from house property. So it will come under income from house property. So another head is income from house property. Rent received, which is my GAV. $80,000. From income from business also I have to remove rent received 80,000. Okay, so rent received GAV 80,000 minus municipal taxes paid. Is there any local taxes paid? Municipal tax paid, no, I can't see any. Okay, next, by winning from lottery 49,000. Okay, this 49,000 I have to remove from here, from income from business, because it is income from other source. Winning from lottery. So winning from lotteries 49,000. Next is, so this is income from other source, winning from lotteries. So I'll add in winning income from other source, winning from lotteries. Okay, so it is 49,000, which is a net amount. So 49,000 divided by 70 into 100. So here it would be 49,000 divided by 70 into 100. For income from other source, it will be 49,000 divided by 70 into 100. So that is 70,000. Okay. In the P&L account, it is shown 49,000. So 49,000 effect I will remove from my net profit. So I am subtracting 49,000 from my net profit. Okay, next, profit on sale of shares, long term, 2 lakh. Okay, so Profit, this is capital gain, long term capital gain 2 lakh, up to 1 lakh is exempt. Correct? So capital gains 2 lakh, 1 lakh is exempt. Okay, so 1 lakh is taxable. So yeah, so my next head of income will be capital gains. Capital gains. Okay, so profit on sale of shares, because it is shares and it is long term, up to 1 lakh is exempt. So 2 lakh is given minus exempt 1 lakh. So taxable capital gain is 1 lakh. Okay. From income from business, as it's shown 2 lakh is added to net profit. So we will remove this 2 lakh. Capital gain or profit on sale of shares, you can write whatever you want to write. Profit on sale of shares, it's long term capital gain. So 2 lakhs, I'll remove the effect. Okay. Next, dividend from Infosys Limited 1 lakh. So this dividend will be taxable under the head income from other sources. Okay, so I'll remove it from here. So I'm subtracting dividend 1 lakh and I will add it to income from other source. Dividend from Infosys 1 lakh. It will be taxable under income from other sources. Okay. Now let's see the additional information. Purchases include 30,000 paid in cash. So 30,000 is the expense which is disallowed. Okay. So you will add cash purchases 30,000. Because if it is more than 20,000, the whole amount is disallowed. If cash purchases is more than 20,000, whole amount is disallowed. So 30,000 disallowed. Advertisement expenses include cost of neon signboard. So 50,000 is capital expenditure, okay, which is shown here in advertisement expenses. So this you have to add back. Okay, capital expense, expenses on what? Neon signboard. Capital expenses, neon signboard 50,000 you will add. Okay, sales tax of 30,000. So this 30,000 is allowed now because it is paid. So last time it was not paid. So last time 30,000 was disallowed. Last year 30,000 was disallowed. Now this year it is allowed. Okay, so this 30,000 you can subtract. Expenses allowed. Sales tax paid. Last year sales tax paid during the year. Last year's sales tax which is paid during the year, it is not included in P&L account, okay, which is 30,000, right? So 30,000 you will subtract because now this expense is allowed. Okay, actual bad debts amounted to 60,000. We have shown bad debts 52,000. So 60,000 minus 52,000 is 8,000. So 8,000 bad debts you can claim. Okay, so bad debts 8,000, right? 60,000 is the actual bad debts, but you showed only 52,000. So remaining 8,000 you are claiming. Okay, so you can subtract 8,000. Next, general expenses include 50,000 drawn by assessee. So general expense 50,000 is drawn by assessee. So 50,000 is drawings, not expense. Okay, the owner only removed 50,000. It is not expense, it is drawings. Okay, so drawings you have to add back. Drawings 50,000 you will add back. Okay, with this we have finished posting. Okay, now let's solve. Okay, you have to add all these amounts. So 3 lakh plus 3 lakh plus 1 lakh will be 7 lakhs plus 1 lakh 50,000 plus 30,000. So this is 2 lakh 50,000 plus 30,000. 1 lakh, 2 lakh, 2 lakh 50,000, 2 lakh 80,000. So it comes to 9 lakh 80,000. Correct? 3, 6, 7, 8, 9 lakh 80,000. Yes. So you'll add 9 lakh 80,000 and things which you will subtract. Okay. So let's add this. 20,000 plus 30,000 plus 10,500 plus 3,000 plus 80,000 plus 49,000 plus 2 lakhs plus 1 lakh plus 30,000 plus 8,000. It comes to 5 lakh 30,500. Okay, so when you add and subtract, which is 34 lakhs plus 9 lakh 80,000 minus 5 lakh 30,500, it will become, it comes to 38 lakh 49,500. This is my income from business. Now income from other sources. This total is my income from other sources. Which is 10,500, 10,500 plus 3,000 plus 70,000 plus 1 lakh. It comes to 1,83,500. And okay, income from house property, I'm writing 80,000. Okay, less deduction 30%. Standard deduction at the rate 30%. So 80,000 into 30%. 24,000. I am assuming that this rent received is from house property. Okay, this rent received can be from some machinery also. Then it will not be income from house property. Okay, then it will become income from other sources. Okay, yeah. So 80,000 minus 24,000, it comes to 56,000. Okay. And capital gains we have already calculated. Okay, so I shall write a note. Okay, you can write a note assuming that rent received is from house property. Okay, and then you can claim 30% deduction. Okay, I can also assume that rent received is from like on machinery is given on rent, then it will become income from other source. So whatever you are assuming, write it in the note. Okay, but it's better to assume that this is from house property. Just put a note assuming that rent received is from house property. Okay, 30% deduction you can claim 56,000. Okay, so now income from computation of gross total income. Computation of gross total income. Okay, now you can write income from salary. Two columns, particulars amount. Income from salaries nil. Income from business and profession. Income from business we have computed. It is 38,49,500. Then income from house property. Income from house property 56,000. Then capital gains 1 lakh. And then income from other sources. Income from other sources 1,83,500. Total it. This is your gross total income. So it comes to 38,49,500 plus 56,000 plus 1 lakh plus 1,83,500. So 41,89,000. I'll be solving 2 more problems. Okay, I'll be